Hello everyone, just wanted to quickly walk you through and break down this trade which I took 2 days ago now on Tuesday, the 15th of August. So let's just quickly get into it, which was essentially, it was a simple swing failure pattern, but I wanted to talk you through a bit about the context in relation to it, and a few other things that I think you can really take from this video which will help you improve your trading. So to begin with, you obviously saw this fairly decent drop to the downside throughout Monday, okay, which was maybe I think it was around a percentage move, or percent and a half move towards the downside. You see this like Tuesday sideways range start to form. And my initial thought process, and the first thing that comes to my mind is you obviously put in this initial high. Okay, you put in this initial high on Monday night. Okay, Monday night you put in this initial high. You then spent some decent amount of time going sideways. Okay, before then testing this high and then seeing a decent drop to the downside. And I'm gonna talk you through this why this high was even more significant, because whenever you enter any given trade, I want you to take into consideration if you are wrong on this trade, okay, where can you re-enter if you are stopped out or whatever it may be. You need to be thinking of a plan. You've got your plan A scenario, which is take the trade. Plan B is if you get stopped on this trade, what we then do or look for. And then this scenario is really interesting because my thought process was, if I get stopped on this trade here, which was a swing failure pattern, which I'll break down the order flow of this in a minute for you. But if I get stopped on this trade, I'm simply looking for the next swing high on the chart to be taken. Okay, which is all the way up here at this point. Now, why am I looking for that? Well, simply because of all this inefficiency. So if you look here, you can see it's literally price is one time framing towards the downside. And if you're not aware of what one time framing is simply where you've got continuously red candles where the open doesn't, you don't pass the high of any of the previous candles. So you can see here, essentially, you have the open here, it doesn't surpass the high of the previous candle. Open here doesn't surpass the high of the previous candle. And you can see it, so on and so forth. You're not surpassing any previous highs in that nature. One time framing toward the downside, and that's creating inefficiencies in this case. Okay, and in this case, you basically put the initial high. A lot of time spent going sideways before then testing the high and seeing a decent drop to the downside. Now, let's break down the order flow of this. How I anticipated the SFP, the actual entry, the exact moment of entry, the invalidation, and a bit more in relation towards context. So let's get into that now. Now, we're just headed over to ExoCharts desktop now. By the way, if you want any of the templates you see in this video, whatever it may be, typically I release them over on my Twitter at Luxury with an Extra Y for free. Just go over there, find it, and if you have any problems there, just tag me on Twitter and I'll do my best to direct it to you in the right way. So, we put in our initial high again. We've just discussed what we're doing on TradingView. You've got your initial high. This is the exact trade I took in the time. I was actually in a call with one of my students, and we took this one together, so it was quite nice to take in that sense. But we had the initial high put in the chart. Something really interesting which I did, dynamic profile tool. Go back and watch probably my last video or something. I believe it was my last one or one before that. We're going over this strategy, talking about the trap traders, essentially eager traders coming in early. In this case here, you can even see really quickly CVD is decreasing. What does that tell me? That's short positions coming in, and then open interest increasing. Then that identifies that that's new positions coming in, so new shorts coming into the market after this initial high is put in. Okay, which then just tells me that there's higher potential for a run of liquidity above these highs. Okay, which in the end you ended up getting. But we're building up to that now, which you can see here. So you put the initial high in, a lot of shorts coming in within the market here. Not too many actually, but enough. Before then sweeping of the high and seeing a move towards the downside. Okay, and now just zooming in on this candle here, because obviously we have our level of interest, and the execution only comes once we've tested this level of interest, and so on and so forth. So you've obviously tested this level of interest. You've seen a wick above, close below. Cool. A lot of you people are familiar with that type of just very generic setup, but let's break down a few more things. So the first thing being a spike in volume. Now, I want to dive into this point a little bit more in a bit more detail here, really briefly. Spike in volume for me is relative. You can be using, TradingView to identify this as well, because I've got the volume spikes here and whatnot. But just going over to here, a spike in volume is relative. So what that means is, if we're looking at this candle here and going 6.8 million, this might be a little amount in this scenario, but in another scenario, or this might be a lot, a high spike in volume in this scenario, but in another scenario, 6.8 million might be low, and that's what relative is. It's really discussing what is near it, and it's not going to be the same on each and every occasion. And how can we identify what's relative? Well, very, very simple. I use the kind of just rule of thumb in my head, which is I look at the candle of interest, which hit our level of interest, which we've been discussing throughout this course of the video. Okay, which was that initial high, and then beyond that we then saw, okay, look at the last 20 candles or so, eyeballing it. I'm literally looking at this in real time. Okay, and what I'm saying to myself is, how does this 6.8 million compare to the last 20 or so candles? And we'll do this right now. You can just generally see the spikes. What I'll do in my head, I go, the spikes are like 2-3 million, 7 million here. But what's the average, and is this candle here higher than the average? Okay, and I would definitely say it is, because you can see the average, I would say, is around 2 million. Because you obviously got all these lower candles here with like really small volume, 300, 400k, some with 1 million, some with 2 million, some with higher than that, and that's why I average it down probably around to 2 million. But it doesn't really matter what the exact figure is, because this here is higher than, basically around 7 million, which is one of the highest ones. Okay, at our key level of interest, we've seen the spike in volume, so that's checked. You've then seen a trap value area. Again, I've done a thread on this on Twitter in full detail, which is again at luxury with just an extra R on the end, luxury with another Y. And essentially what we've seen there is, you've seen the open of the candle here. It's wicked up above the level of interest swing failure pattern, closed back below, but the value area is this shaded, the highlighted region here, and we've closed outside of value, essentially trapping all of this value within this candle here itself. And when you see that along with building this up now, where you've got the spike in volume, the trap value area, there's a few things that, we've got a T-size divergence, which I'm waiting to cover this. I'll get a lot of eager questions in relation to this, and there will be a point where I cover this in great detail, because it's really useful to me. And in this case, again, it pops up, but that's not going to be really too useful for you, because I haven't discussed it yet. But ignoring that part, it doesn't really matter right now. You've obviously got the trap value area, the volume spike. The next, one thing that didn't happen within this candle was the POC being near the top of the candle. So what you generally would like to see is, like, you got reversal points. If you're looking at a swing low being put in on the chart, you'd like to see the point of control be put in towards the very bottom of the candle. And in this case, the swing high, you'd like to see the point of control be put in towards the top end of the candle. It's towards the middle. Is this bad? Not necessarily. It could have been worse, because it could have been really back down towards it, which is not what I want to see. I'd like to see it generally trapped towards the very high. This is towards the midpoint, so it doesn't really play much influence. It could have been better. What I'm saying is, if it was near the high. And the last thing to look at, which really caught my eye within this candle, well, there's two other things, but the first one being the extended delta. So really, really useful. This, again, I've put out a thread. I'll show you later in this video how you can actually go and find a lot of my threads, really, really quickly, because I think that'll be really useful for you in terms of educational purposes. If you just go to here, you go to, I was thinking about the extended delta, right? So you've got the high, the high of the candles here, you close down here, you got the open here, right? Look at the delta. So the finalized delta is minus 650,000. The delta maximum is 2.1 million. Okay, so what that is telling me is that the candle finished. Okay, the candle finished on minus 650,000 delta, but at its highest extension point, delta maximum in this case, it reached 2.1 million. Okay, and that 2.1 million essentially got trapped, because there's a massive swing between 2.1 million and the finalized minus 650,000. Now, if you're looking at the previous candle, just as an example, the final candle delta was 2.4 million, but actually, you had an extended delta maximum of 2.5 million. So there isn't anything, telling in this candle, but this candle here, where you've got all the other factors come into play alongside this delta extension type thing here, where you've got negative delta finalizing the candle, but within the candle itself, you had really extended maximum delta. That shows that there's a lot of potential trapped buyers within the high of this candle here. Or, you've seen a lot of buys coming in, which have then just been swept underwater. Now, switching that up again, alongside that, you've actually seen a decrease in open interest, which a lot of people always really try and trade off of open interest, which is like they find it the most important thing, which it can be. But for myself, we've discussed already that there's a lot of new shorts opening, so I don't necessarily need to see a lot of new positions trapped up here, but more so I'd be more interested in looking at essentially people getting stopped out of their eagerly early shorts before seeing a move. So a decrease in open interest is no surprise to me here. It's nothing too surprising, okay? Followed by this, okay, the last thing I wanted to mention within this trade here, which, a lot of this is going on, I spent 10 minutes trying to break this down for you in detail, but this is really, go back and practice this using ExoChart's replay function. Right click, replay from here, and go back and replay and watch this in faster time, because then when it comes to the real time trading actually of the candles, you're going to be much more better at it, or you're going to be better at it essentially, because you've been practicing at a faster rate than the actual candle is printing at. So just a bit of a tip there, and something I tell to my students. But the other thing here you don't have in this candle is liquidation. You don't have many liquidations coming in here, but that doesn't really matter. Okay, so there's a lot of things I've really discussed within this candle. The volume spike, the delta, the trap value area, the point of control, a bit about the T-size divergences. Obviously the key level of interest, and that's a lot of factors to be taken into account. Okay, so that's it for the trade, breakdown type side of things right now. I'm going to go over right now the Twitter and show you how you can access my threads really quickly if you want to find something and index kind of anything throughout my Twitter page that I'm always continuously posting. Okay, so this is the Twitter. Again, very, very briefly, I'll break this down for you now. It's a little ad. There's an ad, well, not an ad, but a Chrome extension called Twemex. So Twemex. You can add this. It's like a little sidebar extension. But what's really useful, if you come over to my Twitter page or X page now, whatever you want to call it, you come over to the top right here, right? You can see here, you can literally index and search anything you want on my page. So obviously it's got my most viewed stuff here, but you can obviously click and see entry triggers, order flow, a thread, click on it, view it, liquidity levels. I think you lot would really find this one interesting, so click on it, and again you can come down and view this entire thread itself and go through each individual page if you want, and I think you lot will find this really, really useful. So again, go do some research, find some content, educate yourselves, I guess, in some way if you wish. Again, these are all just my own experiences through just continuous problem solving on the charts. But I hope you enjoyed this trade breakdown, everyone, and I'll catch you all later. Thank you.